the home of the do-it-yourself trucker. When everything goes wrong, you got to Redneckanize.
Yeah, if you're wanting to become an owner-operator, if you haven't joined it, I joined it as a company driver, but if you haven't joined it, OIDA is a great organization to get started. And they've even got forms online. A lot of guys say, well, shoot, I can do this, you know. You got to know what your cost per mile is for being an owner-operator. What does it cost you to own that truck? What's it cost you for tires and oil changes and expenses and payments and whatever? And what can you get paid? Here again, I've known guys. I've heard them on the road dog. He goes, I want to buy a truck, then I'm going to go look for a job. No, don't work that way. You kind of want to know what you're going to be paid as an owner-operator before you buy that truck, because that really dictates what you can pay for that truck.
Oh, yeah.
You know, so I think it's just funny. Well, I'm going to buy a truck, and then be an owner-operator, then I'm going to go look for a job. Kind of like the old saying, getting the cart before the horse, you know. So you really want to know what your cost of business is, and you really want to know what you're going to get paid. If your cost of doing business is $1.10 a mile, and they're only going to pay you $1.05 a mile, yeah, you can probably run for a week or two.
Right.
You're going the wrong way.
Yeah, and you know, and I think that's one thing that like when these big carriers get you into a lease purchase program, you know, you're going to have to run for that carrier. Now, those carriers, what you got to find out is what kind of programs are they going to have. You know, even if you get into a lease, which I'm not gonna say that getting into a lease is a bad thing, but it's definitely not positive for you know, being a true owner operator. It's definitely different. So think about the lease purchase first.
Thing.
That's, you know, lease purchase. That's a whole different ball game. The deal is now that you're in it, what are you going to do? What are you doing? Are you getting paid cent per mile? Are you getting paid percentage? What's the percentage rate?
Yep.
If it is cents per mile, is it based on the you know, a certain lane or whatever? And a lot of times, if you look at it right, you know, it's like no, it's you're not going to be involved in any negotiating. You don't get to do any of that, which is part of being an owner operator. You're not going to be able to get any kind of like stimulating market. So like if you do get into a situation where you're having to take a load into Florida, well, if you work for a big carrier that pays you a flat rate per mile, that means every time you go to Florida, an owner operator that has his own authority, especially, he might be making $5 a mile, and you're only making, you know, $1.30, $1.50. So, you know, stuff like that you're missing out on because you're in that certain scenario. Which, hey, I'm not going to say that you can do that, that you can't do that and make money. You probably could. It all depends. You just got to know. And if you want to expand, now once you've been in that situation where you've been an owner operator for a carrier that you lease purchase from, and you want to go now, and you're like, you know what? Now I'm going to go step out, and I'm going to go work for Landstar, or I'm going to work for somebody else where I can start learning my own rates. I tell you what, it is like going from high school to college Division I football. It's like playing in high school and going to go play for Alabama. It is a whole different ball game. So don't even think that you can, because there's a lot to do with negotiating. There's a lot to do with you know, working with different customers, and then the brokers. It's the different people. And you know, I came from a customer service background where I wanted to be a customer service. Well, guess what? I thought that all these people were looking out for my best interest because I was providing them a service, and they're not. They're not looking out for your best interest at all. They don't care. They just want to make that money.
No. I tell you, that running your own authority thing, I've thought about it several times. In fact, about a year ago, I was thinking about getting my authority and doing what they call parking it. Just so that later down the road, when I got ready to run with my own authority, I had a lower authority number, and the brokers like that. But there's costs involved with that too. And somebody told me one time, he says, you know, if you want to run your own authority, you better make sure you got about $5 to $10 grand in a bank to carry you over the slow times, because some of these brokers may be 60 or 90 days before you get paid. And that has always soured me on wanting to get my own authority, because when I lease onto a company as an owner-operator, every week, every load I haul the previous week, I get paid for the next week. They wait for 2 or 3, 4 or 5 weeks to get paid sometimes, if not longer. But not me. I'm guaranteed my money. And a lot of people say, well, but you're paying them 20-some%, whatever your percentage is, off the load. I says, yeah, but, you know, you figure, now it's all about money and cash flow. And if you're going to go broke waiting on getting paid and can't afford the fuel to put in the tank to haul because you're waiting on payments from other brokers, well, you're losing more than 20%, whatever that percentage is. So, you know, it's all about planning. And I remember Bozo, I think it was Tucker Bozo saying one time, he said, you know, as owner-operators, you all got to watch every penny. You got to really know where your money's at and how it's going in, how it's going out. And they're right, you know. So,
yeah.
I enjoy it. I get extra money, and I have fun out here, but I've never been behind ever on a payment, and I've always been running and kept myself running and making my payments, and I've always built up a slush fund so when I needed it, I could pull out of that to pay repairs, you know.
Yeah.
A lot of guys don't set aside money in a slush fund.
Well, and that's the other thing too. Is like you're saying with the owner operators, a lot of guys that I know that are owner operators with their own authority, not only do they have a slush fund, but that slush fund is pretty much everything that they pay for comes out of that fund. You see that they've got probably, 6 months worth of expenses saved up because of the fact that they might not get that money for working that load for another 3 months, or they've leveraged the debt where they've got a credit card or some kind of short-term loan, like a line of credit, to where they can borrow a little bit of money at a time, and then of course when they get paid. Now a lot of guys, they do their own authority thing, and they it's like you're saying, they're dead broke until they get paid. And a lot of times you see them where they'll get paid for 6 months worth of freight at one time, and then they go out and go to Vegas or whatever like that, and then they're eating hot dogs out of the package for the next 6 months until they get paid again.
I've known guys that will build up a slush fund, and then they go, wow, I got all that money in the slush fund. Yeah, let's go. Like you say, let's go on a cruise.
Yeah.
And my truck's running good now. I can borrow out of that slush fund to pay for some fun. And next week they go on the road and they throw a rod. Oh shit! Well, you can't ask for the money back from the cruise company because they ain't going to pay for your rod. And then you got to go to the bank and you get upside down. And I tell you, I've got a lot of friends. I got a couple of friends. I got one friend now. He fought it. And I said, what are you going to do with slush fund? I don't have a slush fund. I go, what are you going to do if something happens? Well, he borrowed, and he borrowed, and he borrowed, and then he got to borrowing from all his friends, and now, and I never borrowed the money because, I don't want to ruin a friendship because of that. But he owes people, and finally he says, what do I do? What do you think I should do, Jeff? I said, I'd get rid of the truck. I'd give it back to the finance company. I'd get away from it. I'd go be a company driver because they didn't have to worry about expenses. You can run like you like running. Some guys just never once they become owner operators, they can't grasp it. And you've got to be able to set that money away, and knowing the only time you can touch that is when the repair shop asks for it.
Well, I think
you got to know.
Probably,
you got to watch your tires. You got to watch your pre-trips. You got to know where your maintenance is on the truck, knowing that you're going to have to buy tires next month.
I think one thing that the whole country could probably use, even the politicians all the way down to the soccer moms or the working families, is we all probably should try to manage our money a little better. And I guess that's one thing that we were never really taught that well as kids or growing up or anything. I mean, debt is like not a bad word anymore. It used to be a really bad word, was debt. Well, it's not that bad of a word anymore. It's nobody has a problem with it anymore.
In my book.
Yeah, and well, I mean, you're talking about like banks, credit card commercials, and all that. It's having a credit card is a great thing, or having borrowing money to buy a car is a great thing, and borrowing. I mean, like just look at it now. Okay, this time of year, what are you going to see in commercials when you're watching TV this time of year? You're going to see people trying to advertise to come see your. You're going to be getting a tax refund,
Yeah.
and you're going to take that tax refund. Well, guess who's going to be trying to get that money? Not only are the car dealerships going to try to get that money, or the home loan companies trying to get that money, the furniture stores, they want that money, or places like that, and even now, now that I'm a motorcycle owner and you go down there to the Harley dealership and get your bike worked on a little bit, they got your email address now. Well, now I got an email and it says, come get your taxes done at the Harley dealership and put it down on a brand new motorcycle.
Yeah. That's funny. I mean, you're right. A lot of these companies now are trying to get your tax refund back before you even get a tax back.
Yeah. They don't. You don't even have your paperwork to do your return yet, and they're already.
You don't even know how much you're getting back.
Oh yeah.
I get a kick. I go, oh my God, they're going to loan me $10,000. I already get $500 back. Now what?
Yeah. Well,
now
that's
you
the
get
other thing
inflated interest.
Well, and that's other people don't realize that either. I mean, I've got family members that work at these tax offices like H&R Block or whatever, and of course those places, they'll give you a loan. You do the refund, and it might take 2 or 3 weeks for your refund to come back, whether it's electronic or what, but it'll come back. Well, they'll tell you, we'll give you the money today. We'll give you, like, say your refunds. I mean, some of them, their refund ain't even but like maybe $3,000, and they'll say, we'll give you $1,500 today, and do your and then
5% charge.
Well, 10 or 20. Yeah, it's a huge charge. Yeah, but they want that money now. They want it now.
Yeah.
Yep. It's predatory, and but that's the market, and that's how people act.
I've been to the Dave Ramsey school, and I tell you what, if you have a tough time managing your money, take that Dave Ramsey course. It'll be the best money you ever spent. But Dave says, a good credit rating is not good. He says, it's Dave is like my dad. You buy things when you can afford to buy things.
Well, and that's what his whole premise was. I remember was that people go to a bank. You go to a bank or some kind of a home loan specialist, and you want to buy a home. Well, if you're not in debt, if you don't have credit cards, if you don't think that having debt is good, that means that you don't have credit cards, you don't have any kind of you don't have anything bad, but you don't have anything good either on your credit report. So you have no credit. Well, they won't lend you money if you don't have any credit. And they say that having no credit is worse than having bad credit, because so that means you don't borrow money. Well, that means they're not going to lend you any money. You don't borrow it. And that's and so what Dave Ramsey says is that don't borrow money from those people. If you want to buy a home, because you're going to have to borrow money to buy a home. That means you need to call. Of course, he's got people he works closely with. They don't look at just your credit rating. They look at your job, your bills, and they look at your whole financial history to know whether or not you can afford a home. And that right there is the most important thing. It's that, because we all saw the housing crisis go under and all that like that. Well, they established those securities on the mortgages because people were paying for their homes. And in the 70s, the premise was, well, these are good loans, because why wouldn't anybody pay their loan? Why wouldn't anybody pay their mortgage on their house? Why would they not do that? People want to stay in their home. Well, then in the 90s and the 2000s, people were like, I have a house payment, but I'm not going to make that payment. No, nobody cares. I don't care. And next thing you know, boom, the market burst because the loans are bad.